What's up guys, and welcome back to the investing journey. Today with a new and exciting video, I'm going to share the insights of my 7,000 euro dividend stock investments. So let's, without further ado, start with the first stock. So before going to start, actually, I've decided to invest those 7,000 euros in 11 different stocks just to spread out my diversification. They're all stocks that I'm currently holding, so I'm just building up my position and dollar cost averaging on some positions where I'm in the red. And at the end of this video, I'm going to share my spreadsheet that I created for this purpose, so we can see the average dividend yield, we can see the dividend income that I will generate yearly and monthly from this 7,000 euro investment. Plus, we're going to see the dividend growth as an average, obviously, over the span of 1 year, over the span of 3 years, and over the span of 10 years. Plus, we're going to check out the average payout ratio with that 7,000 euro investment. So now, without further ado, let's start with the first stock that I'm going to purchase. The first stock that I'm going to buy is Main Street Capital. I'm going to invest 1,000 euros in Main Street Capital. Let's check out my current holdings. I'm currently owning 15.45 shares with an average buy-in of 38 euros. So I'm currently in the green. I got an unrealized gain of 32%, but I decided to actually purchase 1,000 euros in this dividend paying stock for multiple reasons. Reason number one, it's a monthly paying stock, so I can spread out the estimated income I receive every month. I think that's a nice thing to have. If you check out the year-to-date performance, we can actually see that Main Street Capital had a big drop of almost 13% over the last 11 and a half months. So I think it's a good buying opportunity to just get some new shares for a better price. And if you check out the current dividend stats, we can see the current dividend yield is 7.5%. They have a nice or really high dividend growth rate of over 20% over the last 3 years, which I personally don't think is reliable in the future. So I'm probably going to estimate a lower dividend growth in the future, more like 7%, like the 5-year rate and the 10-year rate. And they have a mid payout ratio of 72%. The next stock that I'm going to purchase or expand my position in is Ares Capital. I'm going to invest 500 euros into Ares Capital. I'm only going to invest 500 euros into Ares Capital because, as you can see, it's already a big position in my portfolio. I am currently owning 87 shares with an average buy-in of 72.62. So I'm a little bit in the red, and that's why I'm going to buy some more shares to increase my holdings. If you check out the dividend stats, the current dividend yield is 9.88%. So it's a very, very high paying dividend stock with a solid dividend growth rate of 8.55% over the last 3 years. If you check out the last 5 years and the last 10 years, I'm going to think that's like more realistic. For the payout ratio, they're currently at a payout ratio of 100%, a little bit more than that actually, which is obviously not sustainable in the future. But I'm buying Ares Capital for the high dividend yield, for the mid dividend growth. I'm going to expect a little bit less growth than 8% actually with this high paying stock, but this is just for pure cash flow. The third stock I'm going to buy is T. Rowe Price Group. I'm going to invest 500 euros into T. Rowe Price Group. T. Rowe Price is a big position in my portfolio, so I'm just building it up a little bit more. If you check out my current holding, I'm actually owning 19.27 shares with an average buy-in of 92 euros, so I'm down a little bit more than 5%, and that's the reason why I'm going to buy some more shares just to lower my average buy-in. If you check out the performance over the last year, you can see that T. Rowe Price is down almost 21% over the last 11 months. And if you check out the yearly performance, they're down more than 22%. So I think this is a solid buying opportunity. If you check out the dividend stats, T. Rowe Price Group has a high dividend yield of 5.18%. They have a mid payout ratio of 57%, and they have actually a negative dividend growth rate. And you can see over the last year, they actually had a dividend growth of 2.3%. And over the last 5 or 10 years, they had a big dividend growth of 11 and 13%. For those who saw my short about Novo Nordisk, I'm actually going to purchase 1,000 euros in Novo Nordisk. I purchased 500 euros of that stock like a couple days ago, and I've decided to build up my position a little bit more. So I'm going to invest, as I said, 1,000 euros in Novo Nordisk. If you check out the performance, I'm pretty sure you're all familiar. Novo Nordisk had a rough year to date with a negative return of 51%. And if you check out the yearly returns, they're down 55%. And if you look at the max, they're still up. I mean, I don't know if the 17,000 is correct, but after July 2nd, 2024, they were down big time. So that's why I'm starting to loading up on this position. If you check out the dividend stats, Novo Nordisk has a solid dividend yield of 3.73%. They have a very high dividend growth rate of 28% over the last 3 years, and even the dividend growth over the last year, the last 5 years, or the last 10 years with 15.97% is very high. So that's nice to see. Plus, they have a mid payout ratio of exactly 50%, which give them a lot of room to grow and maintain their dividends in the future. The fifth company I'm going to invest in is Waste Management. I'm actually going to put 500 euros in Waste Management. If you check out my current holdings, I'm currently owning 6.7 shares with an average buy-in of 191 euros. So I'm down 6% in total. So that's why I'm going to buy some more shares of Waste Management just to dollar cost average into my position. If you check out the performance over the last year to date, Waste Management is down at 8.11%. And if you check out the yearly performance, they're actually down close to 13%. And that's the reason why I'm going to dollar cost average. If you check out the dividend stats, the current dividend yield is a lower yield with 1.61%. They have a high dividend growth rate of 12.17% over the last 3 years, and they have a mid payout ratio of 53%. And for me, waste management is a no-brainer because there's always waste. There will be always more waste because we're still producing more waste to this day. So that's why I think waste management, even with the negative performance on the stock price, they're still a relevant company in the current market and will be for the future as well. The next stock I'm going to buy with the 7,000 euro investment is Visa. I'm going to purchase 500 euros of Visa stock. If you check out my current holdings, I'm currently owning 3.71 shares with an average buy-in of 252 euros. So I'm actually up 13%. But if you check out the performance over the last year to date, they're down 7.03%. So they're down big time. And if you check out the yearly performance, they're only down 3%, but you can see here they had a big high where they were up 16%. And from that high to the current price is a big difference. So that's why I'm going to snatch up some more shares for a better price. I know the dividend yield probably doesn't sound appealing to dividend investors, but for me, this is a long-term investment. So I'm not actually focused on the dividend yield on Visa, but more on the low payout ratio of only 24% and the high dividend growth rate of over 20% over the last 3 years. And if you check out the growth rate over the last 5 years and last 10 years, we can see that Visa grew the dividend 16% over the last 5 years and more than 20% over the last 10 years. So that's a big dividend growth. So this is definitely a stock for the long run, and that's why I'm going to purchase or increase my shares in Visa. So now we saw some companies with a lower dividend yield, and because I would like to have a mix of low yield, high growth, high yield, mid growth, or high yield and high growth dividend rate, I'm going to buy some more Altria Group. I'm going to invest 1,000 euros into Altria. If you check out my current portfolio, I'm owning 19.88 shares. So it's a little bit of a smaller position in my portfolio with an average buy-in of 41 euros and 90 cents. So I'm actually up close to 20% with my current position. But the reason why I'm buying Altria Group, if you check out the current year-to-date performance, they're down 2.5%. If you check out the yearly performance, they're down 6%. And after the big run from July till August this year, they had a big of a fall off, especially in the last couple of weeks. So that's why I'm going to purchase some more shares. If you check out the dividend stats, the current dividend yield of Altria Group is 7.38%. They have a, in my opinion, high dividend growth of 7.62% and a high payout ratio of 81%. I think 81% is still alright. It's of course a little bit high, but there's still a lot of, or at least some room to grow or at least maintain the dividends. So in my opinion, 81% is alright for this high paying dividend yield. So I'm going to go with it. and yeah, just increase my position. The next stock I'm going to purchase is Procter & Gamble. I'm going to invest 500 euros in Procter & Gamble with the money that I liquidated. If you check out my current portfolio, I'm currently owning 10.55 shares with an average buy-in of 137 euros. So I'm down 7.5%. That's why I'm going to buy some more shares to dollar cost average in this position. And if you check out the current dividend stats, Procter & Gamble has a low dividend yield of 2.2%. They have a high dividend growth rate of over 8%, 8.5%, and they have a mid payout ratio, or I think it's a low payout ratio of 47%. So they have still a lot of room to grow and maintain the dividends, and that's why I'm going to purchase some more shares. If you check out the current stock price performance on the year-to-date basis, we can see that Procter & Gamble had a big drawdown of more than 21% over the last 11 months. And if you check out the yearly performance, they're still down 21%. The next stock that I'm going to buy is Illinois Toolworks. I'm going to purchase 500 euros of Illinois Toolworks. If you check out my current holdings, I'm actually owning 6.2 shares with an average buy-in of 223 euros. So I'm down close to 6%. And that's why I'm going to buy some more shares for a better price and going to dollar cost average into this position. If you check out the current dividend stats with the drawdown of Illinois Toolworks, dividend yield grew to 2.6%, which is pretty nice. They have a high dividend growth rate over the last 3 years with over 10%, and they have a mid payout ratio of 61%. So there's, as I said, still a lot of room to grow and maintain the dividends in the future. The 10th stock I'm going to buy is Lowe's. I'm going to purchase 500 euros of Lowe's stock. I'm holding 3.98 shares of Lowe's with an average buy-in of 194 euros. So I'm basically break even. I'm a little bit in the green with 1% or 7 euros and 65 cents. And if you check out the current stock price performance year to date, Lowe's had a big drawdown of close to 20%. And if you check out the yearly performance, they're actually down 23.5%. So I think this is a nice buying opportunity for my long-term dividend portfolio. For the current dividend stats, with the strong drawdown of the stock price, the dividend yield grew to 2.13%, so it's a lower dividend yield. They have a low payout ratio of only 40%, but they have a very, very high dividend growth rate of over 20% over the last 3 years. And last but not least, I'm going to invest 500 euros into Home Depot. I'm currently owning some of that stock. I'm currently owning 2.45 shares of Home Depot. So this is one of my smallest positions in my portfolio. So that's why I'm going to build it up a little bit more. I got an average buy-in of 290 euros, so I'm actually up 7.73%. But because this is one of my smaller positions, I'm going to invest some into Home Depot, because the same with Lowe's. If you check out the stock price over the last year to date, they're down 17%, and over the last year they're down close to 20%. So that's why I think it's a good buying opportunity to get Lowe's and Home Depot for a lower price. And with a lower price there comes a higher dividend yield. If you check out the dividend stats from Home Depot, the current dividend yield is 2.633%. They have a high dividend growth rate of 13.94%. And if we check out the dividend growth over the last year, it's pretty high with 8.36%, over the last 5 years with 11.38%, and over the last 10 years with 19.26%. Plus they have a nice payout ratio, in my opinion, of 65%. So there's still a lot of room to maintain and grow the dividends in the future. As I said in the beginning of the video, now we're going to check out how much dividend income I'm going to receive from those 7,000 euros, how big my dividend growth rate is over the span of 1 year, 3 years and 10 years, and see the average payout ratio of all those stocks I just talked about. So this is the spreadsheet that I created. Here are all the 11 stocks I just talked about. The diversification 1 stands for 1,000 euros I'm going to invest, as you can see here, and the 0.5 is for the 500 euros I'm going to invest. This is the dividend yield. So with the 7,000 euros, I have an average dividend yield over all those positions of 4.59%. I'm going to receive a yearly dividend income of 321 euros and 15 cents, or an average dividend income per month of 27 euros, as you can see here. I'm going to get an estimated dividend growth rate over the span of 1 year of 11.76%. The dividend growth rate estimated over the last 3 years with 13.61%. And the 10-year dividend growth will be 12.40%. Overall, we're having a payout ratio of 60, let's call it 61%. So I think that's in the mid-range. So it's basically fine over all those positions. Obviously, some positions like Eros Capital with a 100% payout ratio is pretty high and probably not that sustainable, but so far it's fine in my opinion. And if you check out the drip shares that I'm going to receive when I'm going to reinvest the dividends, you can see here from this investment, from the 1000 euro investment, I'm going to expect 1.49 shares every year with just the dividend reinvestment on itself. For RS Capital, I'm going to get 2.84 shares. For the T. Rowe Price Group, I'm going to receive 0.3 shares with the dividends reinvestment. For Novo Nordisk, I'm going to get 0.89 shares. For Waste Management, I'm going to get a massive 0.04 shares. With Visa, I'm going to receive 0.01 shares with the dividends reinvested. For Altria Group, I'm going to get 1.48 shares. With Procter & Gamble, I'm going to receive 0.09 shares, and Illinois Toolworks 0.06, Lowe's 0.05, and Home Depot 0.04 shares. So I think overall with this 7,000 investment, in my opinion, this is a solid diversification. We got a nice dividend yield of 4.59%. We have a nice dividend growth rate over the span of 1 year, or estimated growth rate with the span of 1 year, 3 year, and 10 years. With more than 10%, and we have a sustainable mid payout ratio, a little bit higher than mid, of 61%. Hope you guys enjoyed this video. Don't forget to leave a like and subscribe. See you guys in the next video.